Welcome back to the last and final video of the intermediate training series. I hope that every single video has been filled with information and knowledge that you can go apply each and every day within the markets and even hopefully your life. I was thinking about all the recordings that I've done, and I think they're okay for now. I think for right now, for what it is, the beginning of, setting everything up, setting up the website, setting up the material, I think it's okay for what it is. But I do want to improve the videos. I want to make it, a little more cleaner, have a little less talk and more just value without kind of chattering. And so eventually I'm going to kind of work the videos, but for now I think they're good for what they are. So this is the last and final topic that we're going to be talking about. It is trading like a professional. And during your trading journey, you do not become a professional just because you're making money. I really truly believe that trading is an art, and just like anything else in the world, golf, gymnastics, hockey, football, you work on your craft every day. Those people that are professionals, the reason they're called professionals is because they do it every single day, rain or shine. They get up, they're disciplined, they practice over and over and over again. They're repetitive. And that is how they became professionals. Just like everything else, trading is a profession, and you must practice every day. So let's go ahead and get right into it. Waste no time. I just got back from a little vacation too, so I'm still adjusting. Not a vacation. I got back from living life and being able to do fun things. But Colorado's good time. So, anyways, trading like a professional, and make sure to take notes. If you have a pen and notepad, if you're on your computer typing notes, whatever that may be, take notes. Trading like a professional requires a combination of knowledge, skills, and discipline, and a well-defined strategy. Whether it be stocks, currencies, crypto, or commodities, you need to have a well-defined strategy, discipline, knowledge, and skills. Most professionals have been in the game for 3+ years and did not become top traders in a short time span. And even for me, for my personal journey, I mean, it took at least 3 years of experience in the markets to really become better. And even more recently, I've been seeing so much more discipline in my trading, and that only came from the amount of time I've spent doing and practicing and learning about everything there is to trade, right? So, there's a learning curve, and I want this to stick out to you. If you treat trading like a hobby, you will get paid for treating it like a hobby, because you get what you put in. And if you're going to treat it like a hobby, honestly, don't even trade. If you're even on this video and you're treating it as a hobby, props to you, because I feel like a majority of people who reach this video on intermediate are pretty serious about wanting to achieve financial freedom. And so the serious few will reach success faster than those that treat it as a hobby. Okay, number one for the notes. Number one, education and research. This is part of your education. This is your education. Your research is really more on your own, because research is being able to test things from personal level and not just believing everything you hear. Like I really believe that what I'm doing is good. However, you can still do your own research. You can still go out there and look for alternative ways to trade or learn. There's so many resources out there. And the very beginning is learning the basics of trading. This is terminology, market mechanics, and different types of analysis, including fundamental and technical. So that's what you got to get educated on. The basics, the terminology, the market mechanics, and analysis. And part of that is research, which is staying up to date with the latest market news, the economic indicators, relevant events that could impact your chosen market. Oil reserves meetings, Russia, the war, all these things. It includes the research part of trading. So education and research, number one. Number two is to develop a trading plan. Create a detailed trading plan that outlines your goals, risk tolerance, entry, exit, risk management techniques. This one's tough because a lot of beginner traders, even 2 years in, never have a trading plan. They're just trading to trade. My trading plan is right in front of me and it's been working. Right when I stop following my trading plan, I lose. I lose money. Right when I stop following my trading plan, I lose money. And it's not that it's got to be really detailed or anything like crazy, but entry and exit strategies, for example, I only enter at these parameters. I only enter when the market tells me this, etc. I exit at this low, this high, or at a certain pip amount. My position sizing is 1 to 5% of whatever's in my trading account, right? And your risk management techniques. Do you move your stop loss to break even? Are you managing your trade on the hour or the 15-minute? What are you looking at for in terms of moving your TP for some reason? Are you going to close your trade early or leave it open? These are all risk management techniques and really just really good things that are incorporated into a trading plan. And some people can do it mentally, but I had it written down and then it became, a subconscious program within my brain. So your trading plan should be based on a clear understanding of your chosen market and your personal trading style. Okay. And I wonder if there's a trading style thing on here. I was going to mention for the trading style, right? You may be a scalper or a intraday or a swing trader. So, and all of those factors have to be considered when you're creating your plan. What kind of trader you are. Number three, risk management. Risk management. Many professionals recommend risking no more than 1 to 2% of your total trading capital per trade. This one's also tough because if you come here to 1022 and you fund an account with $250 and you have to make 1%, what is that? $2.50? I mean, that's nothing, right? 10% of 250, 10% of 250 is 25. And so here you are risking $2.50 to make $10, and it may not seem like a lot of money. And that's the thing. It's not a lot of money, but you put it into perspective. Put it into perspective. You win the lottery. You make $20,000. You put the whole 20 grand in a trading account. 10% of 20 grand is $200. 1% is now $20. You have $20,000 and you still only risk $20. That's 1%. Isn't that amazing? I apologize. Is it 200? Is 1% 200? I think it is. Yes, it is. So 20,000 times 0.01 is 200. I had that backwards. Now you're risking $200. You're risking $200 to make $700 or $800. See, with $20,000 with a $20,000 trading capital, your 1 to 2% is so much larger. and then you place a trade and you win that trade, you're up $700 for the day. That's the difference $250 to $20,000 can make. Now we get to the big boys. We get to 100,000, 500,000, $1 million. That's when your trading capital can really excel, because your 1% of 100,000 is now $1,000. So now you're risking $1,000 to $2,000 to make $10,000. And that's the difference with risk management is the amount of trading capital. If you decide to risk 30% to 40% a trade with $1,000, that's really up to you. That depends on your, risk tolerance and all of that. So another thing to add on to this risk management is stop loss orders to limit potential losses. If you're not using a stop loss, you're out of your mind. You're out of your mind, because this ensures that your losses are controlled and don't spiral out of control. Once you have the reason why you lose so much money, or people lose money in the markets, is really because they don't want to accept the loss. In life, a lot of people don't like to lose, and when they lose in trading, they want to get it back, and they just lose more, and then they get punished. So, and the reason why I'm spending so much time on these first three is it's the basis for becoming a better disciplined trader. Risk management, develop a trading plan, and education and research. Now we're going to start kind of skimming through a little bit faster. Okay, so number 4, technical analysis. Learn how to read and interpret price charts and technical indicators to identify potential entry and exit points. Use technical analysis to spot trends, support and resistance levels, and other patterns that can inform your trading decisions. We go over all of the ways of technical analysis here at 1022. You have all the resources you need to become a technical master. Trading like a professional, okay? 5 is fundamental analysis. We're talking about economics. How is the FOMC meeting going to impact the markets? What 6 months down the line, what are investors looking for? Why does got a big some of these big ones is like even news headlines for cryptocurrency, such as BlackRock ETF. But what's funny about the news is once you see it mainstream, like when you're doing your fundamental analysis and you're reading, articles, or you're on Forex Factory, looking at what's coming up for the agenda, the interesting part is once it hits Twitter, it's already old. Once you see it posted, even if it's today or yesterday, it's old news. And a majority of the time, people with a lot of money already know what's happening. Like, it's old news. The people with the money are already in positions. You know what I mean? So the whole fundamental analysis is really becoming good at economic factors, understanding, supply and demand, understanding news events, and, how to analyze financial statements. These are things that you should have learned in school. However, you don't retain that information a majority of the time. So we will be talking about this a lot and helping you understand how it works and how to apply it to your trading. Number 6, trading psychology. Develop emotional discipline. If you guys don't have good emotional discipline, I highly recommend you listening to Trading in the Zone by Mark Douglas. He talks a lot about how to handle your trading emotions. For me, just to give you some examples, with, it says emotions like fear and greed. I had a terrible emotional discipline. I was placing multiple trades a day. I was closing early. I was letting positions ride, and I closed super early. I would move my stop loss all the time, and I'd over leverage. I'd be in such a big loss. I'd be sitting there staring at my chart, waiting for the trade to go in my direction, and I would not accept the loss, and then I'd just blow an account. And it was almost like I accepted defeat. Like I knew I was going to lose. It was the craziest thing. I did it to myself. And it was all because my trading psychology was so bad. It was so bad. And that the trading psychology is one of the biggest things for your trading. It will be the determining factor if you're profitable or not profitable. I mean, that's just the honest truth. So stick to your trading plan and avoid impulsive decisions. Over trading and revenge trading can lead to losses. Man, I'm having PTSD right now just talking about that. Back testing and demo trading. So this one is trading like a professional. So I never demo traded a whole lot. I do think it's useful, but I personally can't even speak on this because I rarely demo traded. So you can get a demo account in practice with Fate Capital. And then you can back test. Now, one of the things that that I would like to do more of is get on a demo account and back test some crazy strategy that I'm like coming up with or brewing, I want to be able to do more of that. And I think I wanted to make money so fast and so quick that I was overlooking the process of all of the things that you can do before you hop into the market with live money. So back test your trading strategy, and you can do that with a demo account. So that's number 7. Practice with strategy and demo trading environment to gain experience without real financial risk. That would have been smart 3 years ago, clearly. Number 8, continuous learning. Even though you're a professional, you're still working every day. You're still showing up. You're still finding new things out. You're still learning from other people who have way more than you, way more experience, wisdom, and knowledge about these markets. Trading strategies emerge, right? People like ICT, that wasn't something until someone discovered it. You yourself could discover a whole new way to trade the market that no one else has before. So continuous learning. Books, online courses like 1022, seminars, trading communities can provide valuable insight. Number nine, patience and discipline. Patience and discipline. Professional traders are patient and disciplined. They wait for the right opportunities and don't chase trades out of impatience. Last night, I was trading Euro JPY, and I totally didn't even analyze the market at all. I didn't analyze with patience. I didn't have discipline. I entered the trade and I lost $173 within a blink of an eye. I literally set my stop loss, maybe 17, 20 pips. I mean, the market was in a downtrend and I was selling, but it pulled back so hard and so fast. It was just before London session, which I normally don't even trade during that time. And so I was impatient and I wasn't disciplined with my trading plan. And that led to a loss. So don't chase trades out of impatience, right? Avoid FOMO, fear of missing out. Prioritize high quality setups. Avoid FOMO. Everybody buys at the top. Old news, right? If it, the market's rallying, how to take advantage. The market already rallied. Like, you missed the rally. You're going to be looking for a pullback, for a high quality setup. Be prepared for that high quality setup by being patient and disciplined. Waiting for your analysis to play out. Adaptability, number 10. Markets can be unpredictable. Be ready to adjust your strategies based on changing market conditions. We have an election coming up in 2024. At the time of this recording, 2024 will be happening. So it's December now, December 2023. We're going into 2024. Adaptability. Markets can be unpredictable. COVID. Oil went to $0. Oil went to $0. The S&P dropped over 35% in a month. So unpredictable. Be ready to adjust how you trade based on changing market conditions. Record keeping. Maintain a detailed trading journal to track your trades, decisions, and outcomes. Analyzing your past trades can help you identify patterns and areas for improvement. There are apps and websites that you can pay a small subscription fee to connect to your trading account to monitor your results. And it gives you a very detailed outlook on how your performance is doing. Highly recommend it. Not necessarily going to vouch for it again, because that was something that I'm still not very good at. So I can't tell you to do one thing that I haven't done very good at. But it is still becoming part of a professional trader, which really just takes time and passion. Remember, trading is risky. There's no guaranteed profits. Even professionals experience losses, always. Even though they're winning 70 to 80% of the time, they still lose trades. And when they lose, they just lose differently than you. They're professionals, so they lose different. They manage their risk. So when they lose, they don't lose as much. They don't lose nearly as much as you're losing, or the beginner trader loses when they first start out in the markets. Continuously improve your skills. Clearly, right? Duh. Maintain a long-term perspective. 5 years, 6 years, 7 years. You could be 20, you could be 30, you could be 40, you could be 70. And you could still be looking 7 years down the line saying, I'm going to be making 5 grand a day. I'm going to be making 10 grand, 30 grand, 40 grand a trade 7 years from now. Trading like a professional. If you went to college, or you're going to college, or you're thinking about going to college, trading for 4 years is just like going to college. Every day you show up, loss or win, and you show up for 4 years, you will be a professional by the end of that 4 years. If you quit, though, if you quit for 2 years and then hop back in, that's, you've only put 2 years in. You haven't showed up every day. You haven't studied every day. You hadn't applied yourself every single day. You're not where you should be yet because you didn't take it serious. Some of you may not even be taking college serious. So you're literally like losing out on everything you're trying to learn while you're there in the first place. It's crazy to me. It's crazy to me. So that's going to end it for the intermediate series. I feel like this is a really good video to end on. I hope you enjoyed the videos. And if you have any questions, reach out to us. 1022 community to the moon. 2024, 2025 is looking like an absolute movie, and continue to just grind away and be the best possible version of yourself. Take care, guys. Love you. And I'll see you all in the advanced recordings. Peace.